Hello people, welcome back. Today I'll show you how to do the journal entry, the basic journal entry that you have to start. For this you have to know the first thing is the rules of accounting. We'll be following the golden rule of accounting, the traditional one that is based on three types of account: personal, real and nominal, and of course the debits and credits about it. So let me start by showing you how journal entry looks like. A journal entry, let me write journal entry. Journal entry is basically the books of original entry. What happens here is that the transaction is recorded for the first time. The moment it happens, it is recorded, and it is recorded in this place called journal. It's something look like this. I have drawn lines. One is for date, one is for particulars. This is your LF, this is your debit, credit. So this is how journal entry looks. As and when the transaction happens, we're gonna write a journal entry. All right, so journal entry, this is the format of journal entry. And how we pass journal entry, we'll write a particular date like this, then we'll write like name of which is debited and the amount of it. And we also write next line 2, we'll start writing by 2, name of account which is credited. So please keep these two things in mind. First line, we'll start from here right next to the line, and we'll write the name of the account. There can be many names of the account like purchase, sales, wages, salaries, Ramu, Shamu, electric bill, telephone bill and all. So name of the account which is debited based on the rule of debit and credit. Debit what comes in, credit what goes out, like that. So whatever is coming in, going out, that a name will be appearing here, and whatever is the amount against that we'll write here in the debit column. Credit column will leave empty. Then in the second line we'll write 2. This is just to signify that it has been credited, so we write 2, name of the account which is credited. So debit what comes in, credit what goes out. And if something is going out, credit the receiver. If somebody is the receiver, credit all expenses and losses. If there is an income or gains, if there is some income or gain, we'll write the name of that particular account here. So this is credited, and we'll write the amount in the credit column. Please remember, journal entry of these two lines, once debited, once credited, these two amount must be always same. These two must be always same. And once you have passed this entry, we write narration. We start with writing being, and whatever has happened in this particular entry we'll write, like maybe we started business, or maybe being purchased goods, maybe being sold goods, maybe wages paid, maybe salaries paid, or something like that. So this is how a particular journal entry looks like. Now let us do with some live example. Let me write here. Suppose first journal entry, just give you an example. Suppose date is 1st April 2020. Started business with cash rupees 20,000. This is the first transaction that is happening for the business. What is happening? The owner is starting business with cash. How much? Total 20,000. So now here you have to remember the business entity concept, which states that owner and business are two separate legal being, and they are able to enter into contract. So here what is happening in this entry? Owner is starting a business. That means business is coming into being. Now for this journal entry that we are doing, this one, we are preparing it for owner or business. Yes, for business, not for owner. Owner is giving money, but business is actually taking the money. So there are two accounts that is affected in this transaction. One is, I can say, cash. Okay, one is cash, and the other being, cash is what? Cash is a real account. Why? It's an asset, right? So what rule will apply to cash? Debit what comes in, credit what goes out. The real account rule. Okay. So for a business, for the business, please tell me, cash is coming in or going out? Definitely, owner is giving money to the business. So for the business, cash is coming in. So the rule of real account, which says debit what comes in, credit what goes out. So cash is coming in, so we will debit. So if I have to write journal entry for this transaction, I will write the date first, 1/4/2020. I'll write cash account. This is a way of writing, okay? Debit. How much? 20,000. So first line is done. Now let us look at the second line. Now we have to find out which is the next account that is affected. Anything going out? No, nothing is going out. Is there an expense or income? No, it's not an income. Money is received, of course, but it is not an income. Okay, income is when you receive money and you don't have to give it back. But here money is received by business, but it has to give it back to the owner once the business is closed. Of course, we will not close it soon. So owner is the giver of the cash, and he's a personal account. So I'll write owner. He's a personal account. And what is this owner? Now it's a liability. Liability for the business. So the personal account rule says debit the receiver, credit the giver. So it's not the receiver, credit the giver. So owner account will be credited. Now in the second line of the journal entry here, we will write 2. Please leave gap little bit here, okay? 2, we'll write owner account debit. We can write owner also. We can write his name also if it is given. But usual practice is that we call it capital. Capital account. Usual practice is that we call it capital. Capital means what? Owner's claim in the business. Whatever owner has given money to the business is called capital. So every time owner gives some money, we'll put that into capital. And in the narration, what we'll write? Being, whatever you understand, you write. Okay, here, being business started. That's it. Nothing more, nothing less. So there are, please try to understand again. There are two accounts, two different accounts that are being affected in this entry. One is cash, which is real account, and which is asset. That's why it is real account. So debit what comes in. So we debited cash account 20,000, and the other one was that owner is there. We call owner capital. Capital is a personal account, and which is liability. So debit the receiver, credit the giver. So owner is the giver, so we are crediting his name, capital, sorry, here L. Okay, thank you.